So my goal was always 2,300. As it turns out, that's kind of a technical level for the rally as well. And that's why gold's kind of run into kind of a little bit of resistance there. Now, see what happens next. We could wake up Monday. All of a sudden, China says, hey, we are a buyer of gold at $5,000 an ounce. And then all of a sudden we go to $5,000 an ounce. More likely, at least given how it's always gone in the past, this to the moon stuff is not how it works. Okay, we're not going to 3,000 by the 4th of July. We're not going to $100 silver, all these things that people have been banning about now that there's some interest in the metals again. You go up, you'll consolidate, you'll pull back, move up higher, come back down, move up higher. That's typically how it works. So silver now it's above 26, probably touch 28, pull back, and then we'll see if it can generate enough fresh momentum to blast through there.
Silver prices have surged by almost 10% in just the past week, hitting levels not seen in 3 years. Currently, the latest data shows silver trading at $27.25 per ounce, marking a notable 9.4% weekly rise. This surge brings silver to its highest price point since June 16, 2021. The Silver Institute predicts robust demand for silver as both an industrial and precious metal throughout the year, with expectations of supply deficits continuing for the fourth consecutive year in 2024, as demand reaches its second highest level on record. Analysts attribute this recent surge in silver prices to its correlation with the rising prices of gold, which have exceeded $2,300 per ounce, driven by expectation of interest rate cuts and increased central bank purchases, particularly amid geopolitical tensions in regions like the Middle East and Ukraine. A significant factor contributing to silver's current rally is its technical breakout above the key resistance level of $25 per ounce. However, despite this positive momentum, silver's performance has not generated the same excitement as gold. Craig Hemke, a renowned analyst, notes that while gold experienced a significant breakout at the end of February, achieving new weekly highs and gaining momentum, silver has struggled to close above $26 every week for over 2 years. Hemke predicts that for silver to truly break out, it must surpass and close a week above the $28 mark, signaling a definitive breakout and potentially attracting substantial investment. While closing above $26 is an important initial step, the ultimate goal remains to breach the $28 threshold and beyond, indicating a long-awaited resurgence in silver's market performance. Clips from Craig Hemke's interview with Liberty and Finance will be presented. But before that, viewers are encouraged to subscribe for more updates.
And to me, it's pretty clear what silver needs to do. Where gold, I just mentioned how gold had broken out at the end of February, and everyone, wow, look at this, all-time, new weekly highs and all that kind of stuff. And you had this big rush of momentum and excitement the following week. Silver hasn't done nothing of the sort. In fact, silver hasn't even posted a weekly close above 26 for over 2 years. And so you got to at least get that done. And we may get that done this week, provided we make it through tomorrow, okay? But the top of gold's or silver's breakout is actually 28. It needs to break out and close a week above 28 before it starts moving into the territory that gold now occupies on a clear breakout. So it will probably close above 26. That's the first step. And then we'll probably bang around. Who knows? Maybe we'll just fly through 28 next week and woohoo, that'd be great. But once we get above 28, then silver starts getting a life of its own the way gold has for the last several weeks. You start getting a 3 handle on your silver again for the first time since, 2012. And that's going to generate its own level of excitement. I'll remind everybody, and this is typically how it goes. I would extend this answer for a second, Elijah. The only other time I'd seen a superfecta in gold was on December 31st of 2010. And it finished at all those, even an annual high, okay, at the end. And so then what happened? Gold finished that year at 1420. And by early September, put in that old all-time high of 1920. So what's that, a 20-some-odd% move, right? Well, while that was taking place, silver began 2011 at 18. And by everybody probably recalls, by the 1st of May, it was 48. So it can go fast. I mean, it's not unprecedented to see it happen. But that, and again, this is important for people that think that, I've already missed out. Silver's up $2 in the last 4 days or whatever it is. Silver's got to get above 28. and then pick up a 3 before you really start getting into the fireworks, and we're not there yet. Anytime you get into a longer term or even just a shorter term bull market, where you get an extended run up in prices, under this pricing scheme, where the price you're seeing is primarily derived through the trading of, derivatives, futures contracts, you get this rush of speculative money that comes in, and open interest expands, and everybody's buying the contracts, and the price goes up. Well, eventually you get to a point where all that buying gets exhausted, at least temporarily. And price begins to roll over. Some of the latecomers go, hey, I'm going to ring the register on this. And they start selling those longs that they just bought the week before, or the day before, or whatever. And you get a correction and a pullback. And that money washes it back out. And then you stabilize, but the trend is still up. And then you charge forward again. That's just how it works. I mean, we call it a wash and rinse cycle, if you will. 2 steps forward, 1 step back. And I just can't imagine that it's not going to continue that way. I mean, we could wake up Monday, right? And all of a sudden China says, hey, we are a buyer of gold at $5,000 an ounce. And then all of a sudden we go to $5,000 an ounce. More likely, at least given how it's always gone in the past, this to the moon stuff is not how it works. Okay, we're not going to 3,000 by the 4th of July. We're not going to $100 silver. All these things that people have been banning about now that there's some interest in the metals again. You go up, you'll consolidate, you'll pull back, move up higher, come back down, move up higher. That's typically how it works. So silver now it's above 26, probably touch 28, kind of pull back, and then we'll see if it can generate enough fresh momentum to blast through there.
In December, the Federal Reserve signaled its intent to cut its key interest rate by the equivalent of 3 0.25-point cuts from the current range of 5.25% to 5.5%. Leading up to the Fed's March meeting, market expectations leaned towards further cuts as inflation slowed and growth moderated. In January, derivatives markets priced in as many as 6 or 7 cuts. Craig Hemke emphasizes the importance of the U.S. jobs report, particularly the unemployment rate, as a critical factor to monitor. Federal Reserve Chair Powell has stressed the significance of this metric, indicating that a rise in unemployment could prompt proactive rate cuts to mitigate economic damage. Powell's focus on prioritizing employment over inflation concerns reflects the Fed's cautious monetary policy approach. Craig predicts that market participants will closely analyze upcoming jobs reports notably the one scheduled for April 5th and subsequent reports in May. Any indications of labor market weakness could reignite speculation about rate cuts, potentially bolstering the appeal of precious metals in the market. He asserts that the market's resilience in the face of rising yields and the Fed's focus on monitoring unemployment highlights the underlying strength in precious metals.
I mean, when we wrapped up 2023, the Fed was talking about 3 rate cuts and the market was pricing in like 7 or 8. So as we went into the first quarter, I thought, well, this is going to be kind of tough sledding as this kind of, washes out some and comes back to earth. It's exactly what happened. Market's now anticipating 2 or 3. The yield on the U.S. 10-year note's gone up by 35 or 40 basis points in the first quarter. The dollar index has rallied 3%. You would have thought the metals had gotten slaughtered. But gold was up 8% in the first quarter, and silver was up 4 or 5. So the fact that we've been able to weather that and still rally, that's an interesting part of this equation too. Now, I'll tell you one thing people should really watch, whether it's, as we record this tomorrow, Friday, April the 5th, is the next jobs report in the U.S. The first Friday of May will be the next jobs report after that. Powell made it very clear, and I heard him say it in his press conference 2 weeks ago after the FOMC meeting. He stated that he will be watching the unemployment rate very closely, because if he sees that ticking up, he will prompt the Fed to act preemptively to cut rates, because he's afraid of acting too late. He said this again yesterday in his speech at Stanford. If we wait too long, the damage could be great, is what he usually says. So he's watching the unemployment rate really closely. Last month, it ticked up from 3.7 to 3.9. It's all part of what really got gold going that first week of March. Powell then that following weekend, which is now 2 weeks ago, in an interview with Bloomberg, said the same thing. Inflation will have to take a back seat. if we start getting weakness in the labor market, we're going to put the inflation fight on hold and we're going to lower Fed funds to try to counter that. I mean, he's on the record saying this. So let's watch that unemployment rate, both this Friday and then again the first Friday in May, because haven't come all the way down, and maybe now the market is anticipating even less rate cuts than what the Fed is saying. If all of a sudden rate cuts for June or whatever are back on the table, that could have a positive impact on the precious metals.
Gold prices have soared to a historic peak of $305 per ounce, reflecting an impressive 28% surge over the past 6 months. Concurrently, silver has broken through the significant milestone of $27 per ounce for the first time this year. Analysts at GSC Commodity Intelligence regard silver as a promising investment avenue, citing its comparative affordability compared to gold. We invite you to share your insights on Craig's forecast in the comments section below. Don't forget to like this video, subscribe to our channel, and activate post notifications for more content. Thank you for watching.